everyone, John Henry here, slingshotfutures.com. Welcome to this lesson video. We're going to be talking about the head and shoulders pattern. Now, I'm sure you've probably heard of a head and shoulders pattern. It's one of the most commonly talked about, more advanced price structure formations. But in this one, we're going to be talking about how to trade it and what to look for. Now, just in case you haven't heard of a head and shoulders pattern, you're looking at, maybe trying to figure out a little bit more in depth in terms of what it actually is. What you're looking for is a pattern in the market that ends up looking like this. Now, I was actually going to do an inverted one. Let me do a normal one. So we have the left shoulder, the head, and the right shoulder. Now, this is the really basic way to look at it. Remember, the markets aren't perfect, and there's certainly not going to be a situation that looks exactly like this. It usually ends up looking more like this, but you get the idea. This is what you're looking at. Now, a head and shoulders pattern is two different types of patterns in one. It is a reversal pattern, short term, and a continuation pattern, long term. Now, what do I mean by that? Well, a head and shoulders pattern, let's say it forms up here. I need some room so I can actually draw everything in. What this means is that when the neckline breaks, right, the neckline being from shoulder to shoulder, when that level breaks, that is the breakdown. So that is a breakout type of formation. A lot of different things can happen here. First of all, the breakdown could just be straight down like this. Most of the time, we all know how markets work. That's generally not the way that they work. It usually ends up looking something like this, where it breaks out, pulls back to retest, and then continues down. And then, of course, there is the other scenario where it just doesn't work. It breaks down and fails and continues back the other direction. We're not going to focus on that one this time around, but in that event, generally speaking, if it does fail, you don't want to see the shoulder give way, and you really don't want to see the head give way. If either of those start breaking, there's probably something wrong with the trade. So those are generally where people are going to place their stops. Now, this is a reversal play because we are looking at a market that was already trending higher. It's forming a head and shoulders pattern and is breaking down. But I also said that it was a continuation pattern. Now, what do I mean by that? A continuation pattern with the assumption that it's going to be a farther down continuation. So what that means is if you measure the distance of this from the lowest point of the shoulder to the highest point of the head, right? That distance, whatever shoulder is lower, higher, the biggest amount of movement, the biggest distance. Measure that level and measure down 100%. That is a full deviation lower of the head and shoulders pattern. This area will almost always find some support. Why would that be? Well, sellers who are selling for the breakdown are looking to take profit somewhere, right? And what better place to do it than a full deviation down? So you will get markets bouncing around this area. But if you can get a bread and butter kind of move down where it really breaks lower and goes 2 full deviations down, that zone now becomes a monstrous level of support. And generally speaking, when you zoom out and you look at every head and shoulders pattern that you've ever come across, more often than not, they end up being a continuation pattern where the market comes down, either 100%, 200%, could go 700%. Regardless, very frequently, it will go all the way back up and break out of those highs. So this is not the type of position that you want to hang on to forever, assuming that the reversal is going to be the top and it's never going to come back ever, because eventually it will start bouncing, and when it does, that continuation is looking for a break of that head point, which is all the way up there. So it's kind of a 2-for-1 type of pattern. It's a reversal pattern, meaning that a move up, head and shoulders, looking for it to reverse down, but after that reversal down has occurred, you're looking for continuation on the bounce all the way back up. So what do we see here? Well, this is a good example of one on the euro. Now, I'll give you a second. Can you see it? Right? Now, remember, markets aren't perfect, so it's not going to be the most obvious thing in the world, but can you see the head and shoulders pattern? Right? I'll give you a second. You can pause the video if you want. But the head and shoulders pattern is right here. You have the left shoulder, the head, and you could either do right shoulder there, or you could say this whole thing is the head and this is the right shoulder. Right? Again, markets aren't perfect. You have to kind of do a little bit of personal touch to it, if you will. I like this slightly wider variation personally, but I guarantee you that traders will have been looking at this one right here as well. So we can utilize both measurements, right? We'll measure them both up and we'll just say, you know what? We have 2 different variations here, like this. So what are we looking for? Well, we're looking for a break of the neckline. The neckline is by no means perfect. We're going to measure from neck to neck. So this is option 1, and you have option 2 on the next one, right? A break of the neckline is where buyers are going to start ramping in, right? They're looking for a reversal of this downtrend back up. And what do we have? Well, the more aggressive one, the blue line one here, we have a break of the neckline right here. See how it broke the neckline? Comes rallying higher. Look at the follow through from the buyers. The buyers closed above the neckline and they kept pushing it up, 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 up. Really good bullish momentum to the upside here. But notice what happened shortly after. It ended up pulling back, retesting that neckline a little bit lower, and continuing on. So that's that kind of breakout pullback mentality. But this point here, the entry point, really didn't have to sit through a whole lot of pain compared to how far up it went. Now, the other one is over here, and that is the break of this one right there. This one really didn't pull back far enough, but that is a breakout pullback technically. But we broke the neckline right there, and it continued on its merry way up for the next 30, 40 minutes. So really good bullish continuation here on either direction. And the head and shoulders pattern offered that up. Now, what were we talking about reversal areas, right? So let's measure from the lowest point of the head to the highest shoulder. That's right there. And we're going to pop this right up here. So this becomes a level of resistance. And let's just jump that forward as far as we can. So let's put that to well, it's only been a day, but I'll put that to the 11th. So that is the major reversal point if it can make its way up there. Now, the interesting thing about this is that a lot of traders will utilize Fibonacci levels like everything else. So along the way, a 618, a 50%, a 786, all of those levels do tend to be a little bit interesting. So if we measure that up and go backward from that and put this on just your standard fibs here, let's do a standard Fibonacci. There we go. So we have our standard fib levels, and notice what happened? That's that negative 618, right? Now, I prefer to see the full deviation if it can get it in its system, but remember, we're looking at this as a continuation, and the continuation of what? A continuation to break back down to these lows. So when it starts breaking higher and it's hitting the 618, finds resistance, finds resistance, finds resistance, and then gaps down to the next day, that might end up being the high. And sure enough, it came all the way back down. Remember that 100%, that's the low. Look how close that came. That is a continuation pattern in a farther out sense, right? So it was a reversal pattern initially, but it ended up being a continuation pattern at the negative 618 in this event to try to push the market back down again. So that's taking a look at the head and shoulders pattern. Hopefully you've learned something. I know a lot of people always talk about it as reversal patterns, but look back on your charts and look at how many times it's actually ended up being a continuation pattern, and you might have been able to get 2 trading opportunities out of it. So that's going to do it for this one. If you have any questions, as always, feel free to send me an email, jbrink@slingshotfutures.com. Underneath the video, make sure to click on subscribe. Click the little notification bell icon to the right of that so you're notified every time one of these videos comes out. Aside from that, as always, enjoy the rest of the day. Hopefully you had a great trading day today, and we'll see you in the next tutorial.